feel now is closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me, this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. And yeah, so on this pitch fan path to the upside, mean reversion path, whatever you want to call it, we wicked off of the liquidity at 31,866 on the Coinbase chart, and that happens to be the 0.65 of this mean reversion path. And then we shifted out, hesitated for 12 hours at the 618 and dropped down to support at 30,270, where we are attempting to hold on this Coinbase chart. This little bit of happiness we've been observing daily since January 16th or so, when we were trapped in the channel here within the pitch fan. And we've been noticing consolidation upwards, consolidation points within these channels. So we just decided to keep it on this chart. One other thing I've been recently messing around with here is fib time, or like it's a fib channel. So you basically do the same thing with 3 clicks, but you click the 2 highs and then bring it down to the lows, and it gives you kind of trading channels to look at. Something to think about if you like these type of things, these kind of alternative concepts. So we came up to the 382, rejected off the 382 of this, and if you look at this as a short idea, like you could short it down to the golden pocket, reaccumulate, 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 burst up, take profit, enter short, come down to the 706. If it holds the 706, then it could bounce back up in here, or it starts to break down into the 786 regions. I don't know, just an interesting little bit of happiness there. I like these kind of alternative ways of looking at the chart, as oftentimes the algorithms do use these in their factoring, which is why you see these ascending trading channels over the weekend. So how are we going to trade over the weekend? Let's go take a look at the liquidity of high block. What is high block capital? Well, people lock their liquidity in the charts to get burnt to a crisp by the market maker, and we get to see where those crispy characters got burnt, and we get to see where they may get burnt in the future. So as we broke out yesterday and we went to the monthly time frame 31.7 region and knocked out that $21 billion, which we'll get to in a minute, it cleared all of the liquidity on the monthly time frame, the imbalance of liquidity on the monthly time frame. Meanwhile, you had people, neophyte traders, opening up longs into these candles here, and they were putting $241 million on the line, and without hesitation, it zipped back down to grab them.
Fatality.
And that is what happens when you don't pay yourself. And yeah, so they bounced off that liquidity because some shorts opened with the fervor up in the 31.513 region, and then they sharply reversed, and the shorts were scared out of their shorts, as they would until this time, and then they ripped it to the downside, and the rest is history. And they took out all these pools, 241 million, 101 million, 36, all these stacked pools of liquidity, and now they're opening it up yet again on the other side. So as they ripped to the downside, we have these other pools that are opening up here, 179 million up at 30,624. Most likely come back to this 179 million at 30,309. At 30,309, that 100x pool will most likely get hit. As it does, it looks like it's already heading in that direction. So getting this guy off the table, and this is how you create your W formation. The first leg of the W going up is to grab the 100x. It's your V-shaped. And so they got the V-shaped here, but then these guys are still underwater as they opened up into these red candles. So they're coming back to this 100x pool of shorts. So where do we go over the weekend? Do we create a double bottom and round out? Do we keep extended W down into this liquidity? Let's find out on the higher time frame as we expand our vision to the external liquidity pools. Shout out to everyone here on the live. What's up, Subi? How you doing? All right, so coming down to the 7-day time frame, we had built up an imbalance in the charts after we had previously taken out that thick pool up at the 31.7, 31.8 region. The imbalance to the downside screamed, take me. So they did just that. They came down to 30,000 and sub 30k and took that on the 7-day time frame. A good 10 billion in this region, and not to mention all the maybe 2-3 billion in this path down here. So now they're retracing back into the 100x as we saw on the 1 minute. But you still have thicker pools down below, just a hop, skip, and a jump away. After clearing this, they're now going this. You go up to go down, you go down to go up. So looking at where they could fatigue on this going down path, we need to expand our vision even further outside of this 7-day, but on the 7-day it still screams downside. Do we have this downside path laid out for us to continue? Let's go to the external pool of the 1 month, and just without fail they came to that pool of the 31.7, 24 billion, and they even took out their 15 billion and 11 billion partners all the way up in the 31.9 region. They did not hit 31.9, but I guess going up in that wick region caused the exchange to repossess the money anyway. That 80% rule or whatever it is, that caused them to liquidate, and so that is no longer available. So they went all the way up and took basically 11, 15, 25, so $50 billion taken off the table. And naturally on the monthly time frame, if you take a look back, it's all imbalanced down here now. So they came sharply back down into these pools. And on the monthly time frame, you have only single digits here at the 30K region. Mainly you have down at that double digits at that juicy region we went over the other day, coming to reclaim that wick and knock out all of the longs in the consolidation of the 20+ days we've been in this range. Would be ideal for a swing long trade. Doesn't guarantee it, but this is where you would be looking for the divergence for that 32K play if it were to play out, or even lower. You never know. So that's why I was saying it could not be a sustainable hit without knocking out these guys, because you have basically 23 days now almost of consolidation. And so all these guys in these 23 days are betting that it's going to 32, 36K, 40K. They're hearing their favorite streamer claim, 40K guaranteed inbound, blah, blah, blah. And so they're getting in their positions. And so they're giving that promissory feeling, but ideally you want to see it hit and knock them out. In a similar way here, even here, it was strong, knocks everyone out, goes up, and then goes down even further, creates more bearish sentiment, goes up. You don't have necessarily easy longs and easy shorts. There's no such thing. It's kind of gauging where the induced pain, max pain has been induced, and then going the opposite way. Max pain induced, going the opposite way. So have we seen max pain to the longs before it goes to 32 and 33 and those 400 billion up in that region? Not really. So I would say it needs to come sweep these guys and then bounce off this 0.5 region. 29K even would reclaim this entire candle and then go out. That's just theorizing right now. It's just a spitball. We'll see where it goes, but I've been talking about sweeping the lows would be ideal. But now they got this 31.7 character off the table. That could be the case. Let's go to the 3 month and see what that time frame says. Shout out to everyone here. Good buddy. Nobody get home. Ah, that's too bad. Okay, so on the 3 month time frame, you came up and grabbed that 54 billion on the 3 month and then reversed out. You still have 60 billion and above up in that region. We talked about the external pools on the 2-year being the juiciest swing target, coming down to knock out the 28 billion at 29.2 and 29 even would be a good thing to see for me, as you are also getting imbalance down sub 25K. You got this yellow hot region, and if we expand our vision to the 6 month, you can also see that imbalance lying in the 142 and 163 billion dollars sub 25K and beyond. So if there is a narrative shift, there is the liquidity to suggest coming down into this region at some time. When is that time going to occur? Is it going to occur after we grab that a little bit of that liquidity on the 2-year? The 2-year. If you look at the 2-year, we've said there's 100+ billion pools up to 33.2. Even beyond 33.6, 124 billion, 111 billion at 34 even. But the juiciest zone up to 33.2, $179 billion at 33.2, 32.8, $157 billion, 32.4, $175 billion. So you have over $500 billion just in that 33.2 region. So coming down, sweeping these lows, getting the long traders over those 23 days out, and then going up to here, getting everyone bullish, and then going down to here would be a hilarious unveiling of the truth of liquidity. So coming up to go down and going down to come up. So yes, going down to 29K is what I would love to see at this time. And let's go to the monthly time frame to reinforce that idea. And this is not me guessing, this is where these actual positions lie. Shout out to the high block. Also consider subscribing and hitting that like button, because it is not free to share this for free with you guys. So please recognize that at the bare minimum. So if we go to the let's just leave that and then go to our charts to look at the momentum as we approach the daily candle close. All right. So what were we looking at here? So we have a deep retracement, which was basically completely recovered. This deep retracement, we did see 706 reaction on this retracement. So this is basically finished, so we can delete this, goodbye. And then we were talking yesterday how basically you want to look for a reaction off of the 618 or the 706. It eventually wicked up to the 786. There was a fair value gap up there. We're going to show you where that is, so how you can calculate this yourself. So if you don't know how to find fair value gaps, you can use a free indicator. This free indicator, wait, it's not displaying it. Odd. Either way, this is a fair value gap to me, even though there's a candle to the left. This is called a BPR, a balanced price range fair value gap, because it aggressively went up and came immediately down without trading fairly in this candle. And this happened to be a 786 zone. I was looking at this as a fair value gap place, and it came up to that fair value gap and filled it and never to return. We are also laying out fair value gaps for it to potentially bounce up to and continue its fade. But as we were going into Asia, we said over here, let's go to the momentum lab and say what we were seeing. We initially saw that 618 reaction, then it came up to the 786. You see how we had that 629 already there on the phone? So it came up to that 629 region, which was the 786, and then sharply reversed with Asia. Asia likes to pump it into London. London did a consolidation to New York, which dumped it on London close. So this narrative that builds between the sessions is something to look at. If Asia fades it to London, which they normally like to do, then you could see, what does London do? Went sideways. So the sideways insinuated a continuation. So you had this kind of sideways motion, this ABC motion, and that consolidation set it up for New York to fake pump a dump it. So building a narrative structure within the 3 sessions of the day is a helpful thing to think about. And if you want to get that indicator to just figure out when those sessions are, the ICT kill zones Tradinator one is free. I think it's the least invasive. It's at the bottom here and only appears on lower time frames. So if I go to the hourly, it disappears automatically, see? So it only appears as I approach the lower time frame. So we never came back to test the resistance level of the daily support zone. We came halfway up of this vector candle. This was the equilibrium zone. If we switch this to equilibrium, you'll see it reacted off of the equilibrium, which is bearish. If it only recovers 50% of this impulse, then the impulse in the opposite direction will be intense. And sure enough, it was intense indeed. So that's how you adjust. I've been recently getting into templates, so you can change these. I can make it a deep retrace, or I can make it my pocket retrace, so there's less lines on my chart. Just have the 0.5, the equilibrium, and it just came to that and reversed down. All right, so where do we draw the fibs from here? That we've got these recoveries, so these are basically in the past. You see it outlined in how it operated, and so these are done. They served their impulse and served their drawer. So let's get out of this. Wick was recovered, and this was recovered as well. Congratulations. Or we can leave it up and just say there's a deep retrace zone up here that it could come back to in the future. So this impulse has not been recovered completely just yet. So something in here could be a target in the future. So we'll leave that there for now. So right now you could also do this impulse here and switch this to the pocket, golden pocket. And so within this impulse, there is a impulse to retrace up into the 618, or if it's extremely bearish, it would do the 0.5 at the 30,628 region. So let's go see if there is a pool up in that region, shall we? So we're going to go to the 1 minute and see what is up in that zone by zooming into the pools of high block. So up in the 31,171 here, 30,700. Let's see, 30,799. All right, so 30,799 would put you basically up here. So you'd be taking out this region here. It looks like it's most stacked up at 3130 would be kind of at the 786 region. It would be up at the 786, yeah. So it would be a complete reversal idea if it starts to get up into that deep pocket. You'd expect at least a small reaction if it does go here, or even at the 0.5 of the recovery of this fair value gap here. So you do have a fair value gap, and it came back to this fair value gap, so this one was recovered, and now it created another one. So now you can go to lower time frames and see where those fair value gaps are. There's another one here. This one is here. So you got a few pools up in these regions which coincide with the liquidity most likely. You also have another fair value gap up here, and that coincides with that 100x pool we just looked at. All right, so let's look at the momentum. Let's see what's going on. Throw on our heads up display and throw up the thing. Link in the description for more, momentummaster.info. And you can scroll to features, toggle the tabs to see how it looks like at Bitcoin's bottom at 15K before we knew it was the bottom. And then you can look at the components as we go over them and read about their implementation. All right, so as it stands right now, we had this crossover event on the 5 minute after an extreme dump of this one crossover. Between this one crossover and this one crossover event alone, it would have given you a good 4.2%. So these crossover events are very interesting to express reversal ideas. They're basically your first sign of reversal. That's why they're one of the more prominent, the more accurate leading formula moving averages out there. All right, so as we approach the daily candle close, let's get in the zone with the descent through the time frames. So we're going to take a look at the daily time frame cloud. Daily time frame cloud is quite strong to the upside. The trend to the upside is strong. You got the super trend saying I'm holding unless you drop 6% more down to 28.3. So unless you get to 28.3, the bullish narrative is still on. So you should be looking for swing long ideas for an overall play if it comes down anywhere in this region and starts to sweep this zone. If you look at the, oops, sorry, this was for my NASDAQ scalping stuff. All right, so daily time frame, Williams starting to suppress this idea of this ascent on the daily time frame stochastic, and this could dump us down completely into these regions of the wick recovery on the daily time frame. If we go to the 3-day, which previously will also close in 24 minutes, so we have a 3-day candle close. The Williams average has been coming up here. I think that on this close it will bring it up a little bit more, and you might come to that alarming cross down event point. Also, you're starting to fail. You reclaimed the fat boy baseline over the last 9 days, but you've been seeing a sharp rejection of this thin boy. Does that mean that this thin boy is going to start to cross down over this in this manner? It could be on the 3-day time frame. It's going to be, because it's 3 days, it's going to be about 9 days in the future to see that. So let's go lower. Let's see how the weekly candle is doing. The weekly candle is seeing a huge rejection wick and hanging on the 200 weighted moving average between the adaptive, tried to flip the adaptive and flip the weighted into support to make its way up to these regions. But as I said, coming into these regions would need to see the sweep of the lows, so we're still waiting for that idea. Going to the 22. I was looking at the 22 the other day and noticed some hidden bullish divergence on the money flow here. We were talking about the money flow disparity idea. I didn't know how it played out on the 22, so this is news to me, which means I will have to pay attention more to that in the future. So the disparity on the money flow and the RSI, which we use on other time frames, is also valid on the 22. When you get this disparity where the RSI holds a certain level but the money flow goes beneath the RSI, that it suggests a move, and then getting this hidden bullish divergence print as a crystal played out on the 22-hour time frame. So in the future we will look out for those disparities and honor them accordingly. Also, yeah, we're back to even Steven, and this is coming down possibly on the 22-hour time frame. You got the same 22 minutes for that last candle to close and send us back. I would love to see this come down into the Fertile Crescent zone with the rising sun area. We've been meandering around in an ambiguous way, hard to capture an entry for my criteria. So yeah, on that time frame anyway. If we go to the 12-hour, 12-hour has come up in a manner here. We talked about the thinning being a signal for reversal. We had the cross up event, and holding these clouds and baselines was a suggestion of upside here. The crossover events have you until they don't, and so now you're flirting with the idea, if this candle closes, that this will bring in some fire to this cross down event, bringing you into these nether regions. The 12-hour super trend is still holding since back in June 19th, so that is still holding unless you come down to that level. Ideally, we would like to see it, as we said earlier, this narrative structure and this overtone of rejection on the 12-hour and the potential cross down of the leading MACD suggests you could come lower on the Williams as well. If you break that 50 level, you could be coming into these regions. All right, and going to the 6-hour time frame, also coming down, red vector candle suggesting sellers are inbound, and if you break this 50 level, you could come down into these regions. We'd like to see it. Still holding the super trend though, for whatever reason. Once again, the liquidity does suggest bouncing up into these regions to recover some of this while you create your first leg of a potential W and go lower. It could just be a ABC wave to go down to this thicker liquidity down below, and I think that could be the case at 29,815. So ideally, setting up for a short idea might be the inbound play. If we go to the 4 hour, so we have our levels for these fair value gaps and also the 618 reaction possibility and 4 hour time frame. Starting to reset, money flow above the RSI, suggesting the opposite of fatigue setting in to get sold off. We had a cross down event of the leading MACD back before it dumped, so this was interesting to note. On the 4 hour time frame, Williams could come down a little bit more for my liking. We go to the hourly. Now the hourly is looking like it's having a play here. This is what we would like to see on the higher time frames for that higher time frame swing juicy action. We previously pointed out, after getting off of work, this beautiful little bit of happiness here of this hourly cross up and this double bottom of the fertile crescent zone of the oversold region of the Williams with the rising sun play out and reclamation of the cloud and gone to the upside. This was the perfect sauce that I love to see. This is the thing to look for, the scooping of the price with the baselines. The price closes above the crossing baseline, and then you get that double bottom Williams idea with the rising sun confirmation with the green vector pushing you above the cloud. The cloud is reclaimed, and this is what happens on this schematic, which I carefully traced for you. This pattern of that is occurring again and again and again and again, and so this thing is what I'm looking for anyway. So if we dropped out, which we did, ideally you'd want to see a double bottom occur. So this is a single bottom, so it will come up and get rejected at a point and come down for a double bottom play on this as well. But yes, seeing that green thing for a scalp, if you're so inclined, you could take that, because if you go to a lower time frame, it'll likely have that double bottom cross up idea. So everything's fractal in nature. You're getting those bullish divergence crystals on the 15-minute. You got it on the money flow and the RSI, and you had that double bottom rising sun play out. So this is just the 15-minute playing out within the 1 hour, one leg. So this 15-minute double bottom is a 1 hour single bottom. And so ideally you'd be seeing a rejection off this cloud at some point on the 15-minute. So it'll come up to here at some point and then reject off of, whoops, I don't want to do ABC, I just want to do the arrow. So it'll eventually come up to one of these pools, get rejected off the cloud, and potentially come lower. That's kind of the idea I'm thinking about anyway, and you'll see that fatigue cross up, and the baselines have you at hello. You had this cross up and you never went back down beneath the baseline, and you have that secondary line of defense. That's why I call them the baselines, because they kind of are your baseline of support and the baseline of reversal. And so these little ideas on the 15, even you had that 6 time frames oversold alert, dynamic alert that could be received to your phone, and then you didn't make it to even the fair value gap. You didn't even make it to the resistance level. Actually, I'm gonna delete this. I don't need that many things. That's for NASDAQ when I'm scalping things in fast manner. But yeah. Also, I think we could throw on a bearish trend-based fib level. I think that's fib extension. We can go like this, impulse down to here, retrace up to here. You had 236 as your entry model here. Boom. You came down to the 706, 706, 706, and then trapdoor opened at the 706 to the downside. And we have currently gotten all of that move within the math here. We came all the way down to that 2 level. So we could be coming back into some regions here. I'm gonna delete it just for busyness sake, but that's how this would work. If you saw this impulse drop and retrace up to here, this gives you the entry model idea for a short. These trend-based fibs are powerful. All right, so the 15-minute time frame is overbought. Money flow is above the RSI. So at some point after a stab up, unless you get a massive stab up and don't even make it to the 618 zone, then and don't reclaim it. So a bullish move, there's two things that could happen. So you could break up to here, reclaim the cloud, and then continue higher, right? And then you'd be looking for like a thinning of the cloud at some point off of that idea where it thins in a manner, and then you catch that thinning zone, and then that is turning into a long continuation out, which could be the case. Not gonna lie, it could, but based off the thickness I'm seeing right now on the 15-minute, it would take a while for this to, and without a severe V-shaped recovery out, it's likely going to get rejected off of this level, and that would be the clearing of the 100x in reality. So what is that momentum representing in reality? The clearing of these 100x pools. This is why we look at every facet of reality, not just one. Okay, and if we look to here, yeah, seeing this come up to a fair value gap slash maybe fib level, and then coming a little bit lower would be the extended W plan out, but I wouldn't take the W till I see the divergence and the Williams and everything in the pocket it needs to be, just trying to preempt ideas before they happen. So if we look at the 5-minute cloud is ultimately weak, not so thick on this. Starting to see a 5-minute reset here of the Williams and the stochastic RSI. We have 15 minutes until the daily candle closes. We'll try to stay with you for that time, and then I must bid you adieu. I'm taking my kids to my friend's house to do a LAN party. They like to play Roblox and Minecraft and stuff. Let's go see what it's taking out here. There's no shorts entering, so I don't know what it's doing. There must be shorts on. There's a free liquidation levels indicator here, liquidation levels 2, version 2 by ML application. So we can see some stuff that maybe isn't privy to high block. So it looks like there's some 100xers down here they could be coming into as well. All right, so let's go to total and see how total took the hit. Let's zoom out. So total came up to recover the daily fair value gap here. So this was recovered. It wicked up a little bit higher, even into this range. It didn't quite get that, but it got nearly to the top of the range. But now we're coming back down to the 236, and we confirmed the 236 as a potential support as of this moment. The 236 was what we were looking at for a bullish narrative to be inbound. If you can close out candles above that 236, you could see higher price action. We still have yet to reclaim the wick here as well. And yeah, if we go to the Bitcoin dominance, the dominance took a hit with the XRP case winning. It was interesting to see on the live. We saw that news play out live, and we saw that interpretation live. I said, I don't know what's happening, but the Bitcoin dominance is dropping, which means people are taking their profits on Bitcoin and putting them into the alts based off the USDT dominance also dropping. So they're putting USDT and Bitcoin into other things. And as the total 3 was going up, I was like, people are entering into their alts. And this was an interesting idea to note too. We came to this cloud, started to shift it, started to thin, and boom. So this on the daily time frame gave an insinuation of altcoins going up. I just haven't looked at altcoins in so long because of all the exchange FUD and Binance and FTX, blah blah blah. It's just, yeah. So we came up to the 236 of this bearish trend-based impulse to the downside. We didn't break it, so we're coming back to retrace on the altcoins as well. So total and total 3 is doing the same thing, obviously. If we look at the Bitcoin dominance where it stands right now, the dominance stands to go up. Now, Bitcoin dominance can go up even if it goes down. Bitcoin goes down. Now, this is when it causes people to just leave alts as well. Are they going to try to bleed the alts or continue this over the weekend? I think the alt, in terms of the dominance coming down some more, you are 6 time frames oversold, but the hourly time frame on this looks like it's still overbought, similar to Bitcoin. So this one is coming down some more. It's possible that you could come down into these regions below and retest the 236 once again and recover some of these hourly vector candles on this. So this could be a ABC to come down some more on the dominance as we go recover some of that liquidity. The USDT dominance looking to V-shaped out of here. This means people get kicked into USDT. So all the people thinking 32K was inbound got juked out, and this is money people getting kicked out into USDT. So the dominance for USDT rises. Let's go to the daily or the 12-hour. We previously broke that fib level with the XRP case. It looks like it's a thinning continuation to the downside here. Let's go to the daily time frame. Let's see this impulse. So we have this daily impulse coming up here. We're going to extend it to here for now and then do a deep retrace. So it looks like it was an 886 bounce off of this entire daily impulse to the upside on the daily time frame. We're having an 886 reaction and a 706 reaction. Potentially speaking, this A, B, C to the downside that occurred for the daily. The daily baselines are still attempting to be reclaimed here. They have yet to cross down on USDT dominance. If the dominance rises, once again, that insinuates people going into USDT. Since exchanges find it hard to onboard funds at this time, that normally means people getting kicked into USDT from their trades. Alright, so I can't really glean anything right now off of this. I just want to go back to BTC at the moment. I'll also show you NASDAQ futures. So I've been having a lot of fun trading the NASDAQ, and it does play out on these little plays and liquidity grabs, and there's a lot more volatility. So if you can use different narrative structures to find, fib reactions here off of these impulses, you can basically go into these time frames and find these reaction points. So this cross-up event on the 1 minute had you at hello for this wave up to here, and this little bit of happiness could give you thousands of dollars. So this is kind of an interesting thing to note. And then you only need to pay for evaluation and prove your risk management is on point, and you could be making money here with be getting funded. Those funded links and coupon codes are also in the description. And the Discord people, we have a lot of funded traders there to help. So shout out to those guys on the crew. The NASDAQ looks like it's trying to round out on the adaptive 15-minute, possibly coming into next week, seeing continuation. It looks like it's very similar to Bitcoin in that they're sweeping these regions here that they previously reclaimed. It looks like it's an 886 reaction of this impulse here. So they reclaimed this entire candle basically. So this is complete. Whoop. I'll leave it up for myself to remind myself later, but this is how I do it. I start to see, well, there's a pool here that needs reclaiming. Let's see if they come back to that at some point. Same here, they have a pool in this impulse that still has yet to be reclaimed, so let's see if they come back to that. And that's where I start to build these narratives, these bullish continuation narratives up to 15,931 and so on. Starting to get a little bit more understanding of the NASDAQ now too, so it's starting to get more interesting. Yeah. Let's go see how this daily candle closes in 5 minutes. Looks like it's closing in a bearish engulfing state. Bearish engulfing. Removing all of the gains to 31.8, suggesting it is a stop hunt, rise, drop to the downside. I'm here for it. I am here for it. Getting a cross down event on the 6 hour. Does it lock into position in 5 minutes? We will find out. When these cross down, we have been seeing some fake outs over the last consolidation, but if you do take them at face value, you can get some goodness even in one direction or the other. Let's look at the 12 hour. 12 hour still has some time for this to change. Let's go see what the chat is saying. What's up? Ah, good, I saved you? Nice. Great, great, great. Glad to hear it. Ah, what's up, CNC? Hey. The nasty Naz, yep. Naz is a strange beast to tame. I was telling my friend, it's like a bull and Bitcoin's like a horse. Bitcoin to me is easily tameable. I somehow tune into it better. I'm starting to get the vibe of Naz though. Like there's these times where it does these reactions, so I kind of mark those off and try to trade those times only so I don't FOMO, and I try to look for a certain play, a certain grab on liquidity, if you will. So yesterday, like going into yesterday's play, I'll just pull that up, okay? So let's go to Momentum Master Discord. We'll go to where I was looking yesterday for the NAS. So where was it? Here. All right. No, that was 2 days ago. Sorry. Yeah. All right. So we're going to pull up the bottom here. All right. So this was the bottom of that 618 here. Here. So this impulse to the upside. So they squeezed the shorts hard. I'm going to just tell you the narrative for what I was looking at. So they were squeezing the shorts hard into the open, and then they eventually retraced back down. There was a impulse retrace, fair value gap recovery. That play could have been taken. I was a little bit reluctant, but then when it came down to this golden pocket, I was like, I think they squeezed the longs. They came back to reclaim the liquidity. They could reverse to the shorts now. So I only took this play yesterday in all transparency, but this was where it was. So on the 10-second, you were seeing the bullish divergence on the money flow and the cross-up event. It started to translate over to the 30-second with the rising sun, double bottom, and you had the indecision doji starting to form on the 1 minute. And this also happened to be your 618. So you had this confluence on confluence idea. So I was like, oh, good by me. You have that bullish divergence on the money flow on the 30-second. So it's like you see these smaller time frame entry models for this A wave up, and that A wave just, you know, can pay a pretty penny. Like I said, thousands of dollars. It all has to do with your risk management, but it's a eval, but it passed. I'm on live accounts now, so that money could be feasibly collected at some stage. So these are equally useful options. There's no reason to hate on the stock market. It's a chart, and if the chart pays, then it's worth looking at. That's my logic. So anyway, let's go back to Bitcoin and see where this closes in 2 minutes. So I expect the recovery of some of this liquidity on the 1 minute time frame to recap, coming back into some of these pools, get a 618 reaction perhaps, or come all the way up to this 156 million up at 31,171. If you come all the way up to here though, you might just be recovering and going higher. I would expect a failure to continue down into the pools at some point within the 50% range. So or within the 618, this golden pocket range. If you start to go in deep retrace zone, like if you start coming up into here, then this is like a full recovery of that and possibly gone. So we're starting to see this scooping of the price action on the hourly time frame. This is how you watch it cascade in terms of closing out candles beneath the baselines. If we go to the 15-minute time frame here, I'm not going to leave that on deep. Let's turn that back to the golden pocket. So as Asia likes to do, they sometimes pump it up into London. So are they going to do the same thing? Little minuscule pump with their minuscule liquidity to hand off to London down here? I don't know. I'd like to see it. Alright, so 2 minutes. It looks like it closed. So let's see how the stochastic updated on the daily. It's an exciting thing to see because you can see it only when it's live. So you get to see where this jumps down to. It was previously up here, or so it was up here in this region, and then it gives you like 20 points change, and that 20 points change only happens on that close. If you play it in replay mode, it's very simultaneous. So this is why knowing when the candles close and what happens prior to the candle close, and kind of seeing how it resets some of this stochastic. Now this momentum is locked in on the 12-hour, which sets off algorithms. So there's algorithms that now see this drop to 21 and they're like, holy moly. And you know, similar to our stochastic array, it triggers a lot of algorithmic FUD to fill the air or something like that, and it causes them to offload their positions perhaps. So, you know, watching what the values do at certain times is key. So now we got the cross down event confirmed on the 6-hour. So you the crossovers have you until they don't. So now we don't have this support of the cross up event on the 6-hour time frame. Look for this reclamation of the wick. I would like to see it over the weekend. It would be nice. And then you could have perhaps a reversal. Maybe if you have a red week though, what does that mean exactly for the next week's sentiment? Could be just a simple correction, we'll see. We're jumping the gun though, so I think we gave a thorough update in terms of what to expect over the Asian session into London, a potential continuation up into the liquidity, and then fatigue into a double bottom or extended double bottom, or further continuation to the downside. And that's my story, and I'm sticking to it. So thank you very much for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we'll do the same, bringing the fire, the precision, all that fun stuff. And please enjoy your weekend, trade safe, and I'll catch you on the flip side. Peace.